We're talking about the short term or the relatively near term in terms of growth continuing. Longer term, there is this question of whether we're bringing forward growth, especially in light of what everyone loves to talk about, the debt ceiling debate, which we've been talking about all morning, and this question of whether they're going to be cutting spending going forward. How do you sort of pair the short term versus the long term, the short term optimism in ongoing strength in the economy versus long term, perhaps sluggishness?
Yeah, I mean, I think so, right. I mean, that's... I think my primary, I guess, disagreement with the consensus is really over the timing, right? I mean, I don't see a recession as imminent. I don't see one as likely at any point in the next, let's say 12 months. But the Fed has told us that they believe a period of below-trend growth is required to quell the inflation issue. So that's where the caution comes from. So I think if you want to be honest with yourself, ultimately, there's going to be some kind of economic slump that's out there that the Fed will try to engineer to bring inflation back towards its target. If you really believe in the soft landing at this point, you need to be hanging your hat on two things. Number one, some kind of a productivity boom that brings unit labor costs down, or the Fed basically accepts a higher rate of inflation. And I don't see either as a baseline expectation going forward. So again, it's about the momentum in the economy right now. To me, that doesn't speak to a recession. But as I said, the Fed still believes that below-trend growth is required to quell the inflation issue. So to me, that leaves, you have to kind of stay cautious. I mean, I know it's sort of it's a difficult environment, I think, for investors because it's hard to be sort of sustainably optimistic on equities here, right? So I think that's part of the frustration.